Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so we're going to do another market update video. I know we just did one a week ago, but the market is in this change. And this is a change that we talked about like months ago. We literally called in the spring within a couple weeks when the market would potentially change, and we've nailed it.
Okay.
So we're going to brag a little, but we're also going to show you all the data, and then we're going to talk about the fundamentals behind it. But if you are new to the channel, then please subscribe, hit the notification bell, leave us a comment, and do all that, because that way you can get notified when we have more information on the Las Vegas real estate market, and then we also do videos on the real estate market in the U.S. in general.
And anything interesting having to do with real estate.
Anything interesting having to do with real estate. Okay, so we're going to talk about this thing that's happened, which is first of all, inventories declined about 15%. Number of available homes that were on the market a week and a half ago has declined. We're going to show you that data. We're going to go through the whole thing. We're going to start with the market action index. This is the thing that this is sort of like the needle, what it's called. So the needle, the market action index is 33, and it's actually increased. It was at 32. So what that means is we hit a bottom of the low end of the market where the market starts to pick up from this point. Right.
So we have either hit the bottom or bumping along the bottom, but the point is that the market has stabilized.
Yeah, the market stabilized. And now this happens every year, every single year. And we'll show you, because we have charts that show this, list prices decline from the hot selling season into the fall. We've done these other videos where Zillow has even proven that like the most you get for your house is like April 12th, and the least you get is, November 3rd, right? There's some crazy day, on a Thursday, or they have the exact day of when it statistically happens.
Right, but those are not the dates. Okay,
you have to go back and watch the video.
Yes.
Okay, so the first thing we're going to do is we're going to go through this inventory. Now, this is a chart that shows you on October 21st, which was just a couple weeks ago, we were at 5749 was the inventory, and you can see there we're at 5,048. So we've wiped out exactly 701 listings. So what are two ways listings disappear?
Well, there are actually three ways.
Okay, there's three ways. What are they?
So number one, and of course our personal favorite, is when listings sell. They find a buyer.
Okay.
Number two, listings are withdrawn, which means that the seller has decided to take the property off the market. We've seen a lot of that recently as we head to the holidays, where we've got Thanksgiving around the corner. Christmas is not too far away, so people are saying, hey, the holidays are here. We're just going to take the house off the market until January, which is not uncommon. And the third way is listings don't sell and they expire.
Okay, and then some of those get relisted, but sometimes they don't. So what we'll do is we'll show the chart. And then we'll talk about the seasonality, and then what happens to those listings and what's going on. Okay, so this inventory, now this is just for Las Vegas. This is from Altos Research. The reason why we don't, you'll probably watch other videos where they have these huge numbers, or 11, 12,000, whatever. But that's for like everything in the MLS, and we're only talking about Las Vegas because our MLS covers other places in Nevada and outside Nevada.
Correct.
And we're just trying to find data we can track to watch the change that's representative of what's going on in the local area.
Right.
And Vegas is the largest market in the local area, Henderson, North Las Vegas, Boulder City, all that.
Right. So our point is to track change, to track patterns, and not necessarily to go in the minutia of every little pocket that the MLS follows.
Right, exactly. Okay, so here's the inventory chart. Now, as you can see here, the solid line, the dashed line. The dashed line is the forward-looking, short-term 7-day indicator, and then the 7-day average, and the solid line's the 90-day average, which is smoother because it's taking a 90-day average. Well, what you've noticed is every time the dashed line crosses through the line is when the market goes the other way. The inventory changes. So you can see the inventory is basically what it was in 2019. It's just a normal market. And now we were told by a lot of people that maybe 4 or 5 months ago that this thing was that the homes were going to flood the market, it was going to crash, and all this crazy stuff. And we said, hey, this is seasonal. This is, of course, inventory is going to increase. And it did, just like we said. And now it did exactly what we said. It's leveled off and it'll probably decline more than likely. If you look at the chart, it's going to decline going into the spring unless some black swan event happens, right?
Right. So it's going to decline going into the spring. But remember, come the beginning of the year, people are going to thaw out a little bit. Holidays are over. They're going to spruce up their homes and they're going to come back on the market. Buyers will come back too because they're looking to maybe use some of that tax refund that they're getting to go ahead and use that for a down payment or closing costs. They're going to be getting ready for the next school year. Whatever's going on in people's lives. The springtime, that's a lot of what happens in the springtime is sellers come to market because they're trying to get positioned for wherever they're going for the rest of the year. Buyers come to market because there are a lot of homes on the market and they too are getting positioned for the rest of the year.
What's amazing is that this decline in inventory and back to a normal market has happened during the largest increase in interest rates in 40 years in the US. Mm-hmm. And it did choke off some buyers. We've got some other really cool charts that we're going to show you about the different segments of the market, how the segments actually were affected. But and it surprised us when we sat and talked about it for a while so the inventory wanted talk to them about. You have personal knowledge of people who have called to sell, and we don't have the people that we had 15 years ago that had to sell because they were upside. Like 15 years ago, you could take 20 or 30 listings a month easy because everybody had to sell. Mm-hmm. Their mortgage payment was ridiculously high. They were super underwater. The whole thing was a mess, and they were just, here, sell my house, sell my house. Mm-hmm. And the market flooded. Tell them about the have to sell people. Are there a lot of those people?
No, there really aren't. So even people who do need to sell because maybe they've had a death in the family, they're getting divorced, they've had triplets, whatever their situation is, their life circumstances have changed. Even those people who have to sell under those circumstances, they have equity, so they're not in a position where they're desperate. Okay. So I haven't seen a whole lot of desperation out there. That's not to say that there aren't people lowballing, because they're certainly playing both ends against the middle, right?
Yeah,
they're saying, hey, there are several houses in your neighborhood for sale, and we're making an offer on yours. If you don't, go ahead and take our offer, then we'll go somewhere else. And sometimes it's like, well, you know what? Good luck somewhere else. And sometimes we can negotiate something that makes both the buyer and the seller happy.
We said in September, you go back and look at the video, that there would be a 4-month window where we thought you would have a better opportunity at a deal than you've had in a long time. Mm-hmm. And that October, November, December, January, but it would likely start getting competitive again. Interest rates did fall last week a bit, mm-hmm. and that did kick up some extra people discovered that they should go out and buy, right?
Well, the other thing is that lenders have gotten more creative. So, I've seen lenders put out flyers saying, hey, this home that before was, let's say, for the sake of argument, $500,000 is now maybe $450,000, $475,000, and for a nominal amount of money, relatively speaking, maybe $3,000 to $5,000, you can buy down your rate, and your mortgage payment is actually less than it would have been at $500,000 in the spring.
Right.
So, So there are ways to kind of game this. So the idea that the home affordability is gone and that somehow things are so much more worse than they were in the spring, well, maybe not. I mean, you do need to get a little more creative. You do need to do some homework and not just take what's being offered to you. Mm-hmm. There are choices out there. You have more choices of property. Your contingencies are good, which you couldn't have before. The lenders are trying to get your business, so they're putting all kinds of programs into place. So there are possibilities for you out there. If you're a cash buyer, there are lots of possibilities out there for you as well, because then the seller isn't having to buy down your rate, so maybe you just get that money toward closing costs or whatever. Yes. So it is an opportunity for both buyers and sellers right now to move properties. The bottom line is a property that shows well, is priced appropriately, will sell. I mean, homes are selling. It's not like homes aren't selling. This drop in inventory isn't because homes expired and were withdrawn. It's also because homes have been selling.
Okay. We've got more charts here, and you have to stay tuned because some of these are very compelling. This is very compelling data. So we're going to go back to the market action index. Now, this is the long term of what the market action has been doing. And as you go all the way to the left, you see that's like normal market. Then the pandemic, and you had the 2 years, 2021 and the beginning of 2022, where it got really hot. And then it's cooled back down. But you see the little jump in the dashed line. That means it's getting ready to turn because it means that stuff is changing. And every time that happened, the thing turned. It either turned and went up or turned and went down. So the market action, the action in the market. Now remember, this happens twice a year. It happens in the spring, it happens in the fall. It's still happening. What I thought was interesting was we actually were able to break this into the 4 quarters of the market. The top quarter, meaning the most expensive homes, then the next second most, then third most, then the cheapest homes. We'll call them the cheapest homes. Now, when I'm going to show this chart that you're looking at here, you have to actually flip upside down those bands of property values, because that top band, that red band, is the cheapest quarter of the market. It's the lowest price, lowest value homes. Then that next band, the yellow band, is that almost matches it exactly, is the second lowest. So they're actually the lowest half of homes. That teal, greenish looking band that chart is the kind of the second highest part of the market. It's median home to the top quarter. And then that blue line on the bottom is luxury. We'll call it luxury. We'll just say it's the top quarter of the market. You can see that the top quarter of the market never got super frothy. That they all followed up and down, but what really got hot was mostly the median prices and below. Like anything that was considered middle of the market and down, there was a ton of competition.
There was, because that's where the volume is. That's where the majority of buyers are going to be.
Right.
That's where the majority of transactions are going to be. So that makes sense.
Well, if you can afford a $700,000 house, you can afford a $400,000 house. You get the higher the prices, the more people that get knocked out of the equation.
Absolutely.
Yeah. The reason this is sort of interesting is all 4 of these bands, they can see they move in tandem. You can see that that luxury, that bottom end, had been sort of chilled out for a while. And it'll be interesting to look at this in 4 or 5 months and watch these things start to get more frothy again, especially if interest rates start to pull back as buyers come back into the market. Okay, now, so we went through all of those, and then what we're going to go through is we're going to jump over here. We're going to talk about condos, and then we have another chart because this is super important. Okay, the condo market, as many of you know, was red hot. There was a time at which the median days on the market for the bottom quarter of the market was 0. This meant that, how do you have 0? How is it possible to have 0? So it was 0 days on the market.
Right. So what was happening is agents were putting the properties on the market in coming soon status, so that clock doesn't start ticking yet. So that when the properties actually came on the market, agents already had offers, maybe they had already negotiated them. So the property would come on the market and would automatically go under contract because they had all these offers that came in while the property was in coming soon status before the clock started ticking.
Okay. The market action index for condos was 35, which was the same as a month ago, which means that it's in that trough area. It's basically not going down anymore. And we knew this was going to happen. This happens sort of every year. What's interesting is I'm going to show you this next slide. Now, this is median list price. Now, this is for condos. What's sort of fascinating about this is that, do you see how if you look back at August of 2021, how median list price actually declined? Because median list prices tend to decline sometime during the summer into the fall.
Right.
And then they rise again. And of course, it was a hot year, right? We're not saying that's going to happen again. Price is going to go up 18% or anything. But you can see it just went up and went down. So there are people pointing at this thing. See, that's the housing crash we've been calling. Well, you could say, you can go back every year and go, oh, look, it crashes every year it crashed for 4 months. You should You shouldn't have bought a house in 2011 when you could have got for 200,000. You should wait till today because it's only 465. It crashed all the way from 200 up to 465, but it's down 5% from what you could have bought for 6 months ago, right? I think this is fascinating to see that although the median list prices are still declining, it's very light. And then the other thing I want you to remember is the bottom of this chart's not zero. It's 175. So when you look at the top to the bottom of that line, it's a couple percent. From the peak of the market, the condos in Las Vegas have declined maybe 5% total, which is not in list price, which is literally what it did last year. And then look what it did. So looking forward in the condo market, Juana, no, because you have your pulse on it because you only list properties, right? You don't take buyers out, you just list. Like you help people sell the house.
Right.
Okay. What is the sense you're getting from condo owners, homeowners that you've talked to that are talking about moving at some point in the future, selling at some point in the future? First of all, is that historically many less people than in the past? Like, are less people telling you they're thinking of selling?
Yeah, so it's really interesting because I've had several people say, hey, I would have liked to have gotten the prices that I could have gotten in the spring. I didn't put my house on the market then. I'm going to go ahead and rent it out and wait it out for a couple of years before I go ahead and sell the property, which I think is really interesting. And people who are moving out of the area are doing it just as people who are moving within the area. And I thought that was really interesting because for a lot of people, they don't want to be long-distance landlords. Even if they have a property manager, they still don't want to move out of state and leave a property behind. But they're much more willing to do that right now because they have this sexy number in mind from back in April, and they can't get that sexy number right now. And they're saying, you know what, I'm going to wait it out.
So what you're saying is there is a psychology.
Mm-hmm.
People were told, by the way, that most of the housing crash videos have stopped because the people look like buffoons now, right? And the people short-term backed off, and then all of a sudden it's like, oh shoot, the market didn't do what we all thought it was going to do. And so now you have these people psychologically stuck on what the house used to be. Oh, I had an appraisal that said my house was worth $475. I'm not going to sell it for $425. I have an appraisal that says it's worth. I'll just wait a couple years till I can get that price again because they feel like they paid $200 for the house. So they have an appraisal for $475. The market value is $425, but they feel. Now, this is an emotional thing. They could sell the house and put $200,000 in their pocket, but they feel like they need to wait now for home prices to go up. So they're making this emotional decision, just like the people who maybe haven't been buying is an emotional decision. But if you're buying cash, you don't really care about interest rates.
Right. So I think you make a really interesting point. So people, even though they have all this equity and they're going to put all this money in their pocket, they feel that whatever that sexy number is from the springtime, they feel like somehow they've lost that money. Well, you didn't lose it because you never had it. You can't lose something you never had.
Right. Yeah.
But they do have this sense of wanting to somehow get to that price again, which is fine. That's completely fine. It's their property. They're welcome to do with it as they wish. And so there's a lot of that going on where people are saying, hey, I'm going to wait until I can get what I could get in the spring. Whether they're going to have to wait 6 months to get that or they're going to have to wait 18 months to get that, none of us know, right?
Yeah.
But, it will get there again.
Yeah. We're going to put up the inventory slide for condos because that was the main thing that sort of drove us to do this video was because since the last video, even here, that little dashed line, the 7-day average, actually broke below the 90-day average. That's a leading indicator. You can see every time it happens less because the condo market's a little tighter because it's a lower end market and there's more investors in there and then there's more people that qualify to buy. So the inventory doesn't change as much. But you can see that right now the trend is inventory in the condo market's going to start declining. We'll leave the chart up and we'll talk about this. Inventory today is still less than it was in like the summer or the winter of 2020 and 2021. And it's way less than it was in 2019, which is a normal market. So we have this baseline lower inventory that's getting ready to go lower. Do you think the condo market potentially, because there's more cash buyers, do you think that's the reason? Do you think it's sort of, because inventory in the housing market got to be the same as it was 3 years ago, but it's less still in condos?
Yeah, I think condos just are a different animal. I don't think that condos are as attractive for institutional investors.
Okay.
I think that they prefer single family homes.
We certainly know all the ones we know that have made offers, it's never been on a condo.
Right.
The condo seems to be mom and pop, first time investor. I want to get a condo and rent it out. That's what everyone says. Hey, I still want to get a condo in Vegas, and they think they're going to be on the Strip or something, but they end up out in a suburb and in a little,
So condos are, like I said, they're a little bit different. So condos kind of fall into two categories. Either a first-time buyer because they can get into that, it's a little bit less expensive than a single-family home.
Okay.
Or, like you said, a mom-and-pop investor for the same reason because it's less expensive than a single-family home.
But institutional investors probably don't like to deal with making HOA payments, and
I don't think that it's as much about HOA payments as it doesn't fit their model. Their model is condos don't tend to appreciate at the same rate as single-family homes do.
Okay.
So I think that's really a key piece for institutional investors why they shy away from condos.
And you think, now keep in mind that we're in a market where the predominant home product here is a single-family home.
Right.
If you're in a city, if you're in a downtown area, there's not many single-family homes. It's all, like urban areas, you have a lot more, like in Miami, they call them condos, but they're really high-rise. They just call them condos. Here, we don't call them condos. We call them high-rise. Condo here it's 2 or 3 stories, and it's, looks like an apartment complex, but it's, you own your unit and everything.
Right. Okay.
Okay.
So we're talking about the Las Vegas market rather than the broad market out in the whole United States.
Okay, so let's talk about going forward, because this data, we literally knew this. We could sort of see this was going to happen. We have 2 things happening. One is this baseline low amount of supply of homes in the U.S. Because for 15 years straight now, home builders have built less than the 50-year number of median homes that needed to be built. They built under. We got close to it in 2020. Like in 2021, it looked like 2022 we were going to start to break the median. We just were trying to get for a year above the average. So we have 15 years of cumulative lack of housing built. Okay, and then we also have years of people refied to these ridiculously low rates. So everyone has equity. We've sort of created this wealth effect where people now don't want to give up this wealth, and we've locked up so much of the housing market. And then institutional investors came in. So we have literally probably 80-90% of the market's locked up. It's not going anywhere, right? And then we only have this little bit of the market. So our fundamental belief, sort of, at least mine was that all the movement you were seeing was from this little small corner of the market that was getting traded. Because the rest of this market, our investors that we've worked with over the years, it's a lot of properties. None of them, like literally 0 people are selling. And then, like you said, people that are selling is because a relative died. You've done a ton of those, right? And then, or life happens, divorce, things like that, we have to sell the house, right? But literally almost no people have said, we want to upsize, we're just going to buy a bigger house, we're going to sell this one. And then that literally haven't. That was the thing people did 20 years ago. Right.
So the upsizing or the downsizing isn't happening. People have equity in these homes. People have low interest rates on their mortgages, so they're not doing that. And kind of the point that you made, we have this whole massive stock of inventory of homes that is locked up. So between the people that simply aren't going anywhere because they're happy and comfortable where they are, the people who have good interest rates, and if they do need to switch residences, they will keep that low interest rate loan and rent out the house. And then you've got the institutional investors. So by the time you look at how much of the market that is, that's a large portion of the market. So there's a very small portion of the market that is getting traded, and as that is getting traded, that is actually getting diminishing returns because out of 100 houses that get traded, a lot of these are going to be taken off the market semi-permanently as institutional investors or other investors take them off the market. So now there are less homes to trade. So if you start out with 100 and 10 of them sold to investors, now only 90 of them are going to be able to trade back and forth, and then 10 of those get taken off the market and so on. So you've got this diminishing returns as far as the amount of inventory that you have to rotate through. And then we don't have builders building enough to replenish the homes that are taken off the market long term. So you're in this dilemma where the amount of available inventory is really diminishing over time, and that is going to, like we said before, that supply and demand thing, that is going to support values, and it is going to keep prices from crashing as others have predicted.
And there's certainly some markets that got crazy.
Yes.
Maybe some overbuilding. And maybe they overestimated the number of people that would move there. We know that there are markets like Miami where they're still appreciating. Most markets are not. Most markets are in this funky, weird thing.
Well, but a lot of markets, like you take markets like Tampa and Miami, that they were undervalued for so long. And so that
certainly Miami was.
Yes.
Because
so is Tampa.
Miami is one of the largest cities in the U.S. And you could get like a high-rise condo for, well, of course, at the bottom of the market for 80 grand. You could buy a high-rise in Miami for about 80 grand. And it was just like, who wants to live down there? There's nothing down there. There's not much industry, or it's just kind of a weird, it's a bunch of Cubans kind of a thing. It's not really, it's a big city. And of course now it's grown into this massive, it's a huge airline hub. It's, it's a gateway into the U.S. for South America and Central America. It's the tech center now. And all of a sudden, prices there have more than doubled. And, they are limited because they have an ocean. And then they have areas they can't really build, right? And then so they have to build vertically. And they maybe haven't, there's a traffic problem because...
Well, the other thing is, there's that whole demographic to keep in mind too, as far as the age group that has relocated to South Florida over the last few years. They tend to be younger as they also age a little bit and their families grow. That's going to put some other pressures on that area as far as the size of homes and that sort of thing. So
they may not desire to live in a city. They may want to go out to a suburb or a residential area. So
that area, I think, is going to be very dynamic for a long time, which is part of the reason why it's been so attractive to institutional investors, because they see that the dynamic nature of that area, and they see a lot of potential for appreciation.
If somebody wants to sell their house, how do they get in touch with you?
Our number is there. You can email us, you can call us, text us, whatever works for you. My number is 702-285-4207. Otherwise, thank you for watching the video. Please leave us comments. Tell us what you like. Tell us what you'd like to hear on the videos. If you have other data to share with us, you're always welcome to share that with us. Please be nice to each other in the comments. Like the video, share the video, subscribe, hit the notification bell, and we'll see you on the next video. Bye.
Bye.